Hello, everyone. This is the Deliberate Army. And yeah, I found this video quite interesting. I want to discuss it with everyone and maybe break it down, maybe try to make some sense of it. This guy was, let's just jump right into it. Well, he's what's called a derivative trader. I mean, he's going to explain some of it for you, but let me explain it first. But he basically bets on derivatives are basically gambling for super rich people, for trillionaires, right? He's going to talk this. The derivatives market is 600 to 900 trillion, and it's basically gambling for these ultra wealthy banks, and they're betting on how the economy will move. Okay, so let's dive into it.
A problem to me. You have the entire internet saying something, but China hasn't published it. But joining me to discuss all of this and more is Alex from Reporterfy Media and Travel. You can find him on YouTube. We'll have his channel linked in the description and the title of this video. Alex, thank you so much for joining me again. Always a pleasure to have you on. How you doing?
Thank you. Yeah, doing very good here. A beautiful day here in China, in Chongqing in the afternoon, and in the evening. It's always amazing here. So looking forward to it. Always an exciting day when you wake up in China. Always something new. Trust me, always something new.
Yes, it's a true statement. It's a true statement. Okay, so let's first start off by talking about, there's very large financial news, obviously, but this ties directly into all of the geopolitics that we discuss on a daily basis. Explain to me this chart that you've prepared and what is going on, because as I understand, gold hit a record high, over 5,000. Silver also is having a record high, and it's, I think, the largest 24-hour change in the US dollar index and gold and silver.
Well, thank you for giving me the floor here. I think just to give some people some background, I lived in Monte Carlo, Monaco for almost 2 decades, and I was trained and mentored by some of the biggest derivative traders on the planet. And in my course of 20 years, I have learned a lot, and I've traded a lot, and I continue to trade a lot. That is, I guess, my bread and butter. This geopolitical stuff is also my passion. But what we are looking at here is, I would say, 3X's for the US dollar. Now, let me break this down for everybody here, just so you guys understand how big of an issue this is going to be. Mark my words, I've been right on this one, right on the nail on it for well over 2 years here, where we're going with this. Okay, so let's look at the worldwide derivatives market. That's between 600, we're not talking a B here, we're talking a T, 600 to 900 trillion dollar market. To break that down, to give that to the viewers in layman's terms, that are bets. Those are bets, okay? And those are bets against either the market that it may go up or down. Now, let me tell you what's happened here. In silver, there are words on the street and in the back rooms of pretty much every bank that there are some banks that are incredibly short on silver. And why we have come to that is people are now wanting physical delivery of this. They've lost faith in the United States dollar. They've lost faith in it as a leading currency for the world. And when that trickles into gold, that trickles into silver, and then, of course, that gets to natural gas.
All right, let me break down what he's saying. So basically, he's saying that, so when you're short something, for most people don't know what this means. But basically, when you're short, is you're betting that this thing is going to go down. Okay, and you can bet that it's going to go up, or you can bet it's going to go down. So shorting, what you do is say the price of silver is 100. You're gonna buy that silver from somebody at the $100 mark, and then you're going to hope it goes down, say to $80, right? And then basically you sell it back to that person for $80, okay? And you profit off the 20. The problem is, if it keeps going up, there's no limit to how much money you can lose. And so he's saying there's a lot of people scrambling. There's just not enough silver to go around. One of the reasons silver, my understanding, has spiked so much in the past year is that because of Trump's tariffs, basically China, who has a huge silver supply, they're very big players in the silver market. They created the silver market to kind of get back at, counter what the United States is doing. Okay, let's jump back into this.
Now, why is natural gas going up? Get this, guys, 25%. I believe it was last Wednesday. Another 25% last Thursday. Another 5% on Friday. And yesterday, I think we were rocking and rolling up another 20%. Okay. Now, why is natural gas doing that? Very simple. When people are short silver and have to cover, they have to write premiums on another derivative. And, well, they've been beating down natural gas for a long time. And, well, they've run out of ammunition to beat it down, and now it's doing a reversal. So this is Jackson, this is bad news for the financial markets. We call it a trade. These three things that we're looking in front of us are going to come out somewhere. Now, where are they going to come out? Are they going to come out in burying a couple of banks, whether they're European or US banks? Okay. Is the Fed going to use US dollars to bail out these banks? Or is it major hedge funds that are going to go to the wall? Or are these trades, they are not sustainable when it comes to, even manufacturers? How is a manufacturer going to say, okay, well, silver is the main part to make, computer chips for AIs. Oh, that's gone up 160 some percent in the last, year.
Yeah, again, all these big banks, they were betting silver would go down. They're betting natural gas would go down, but it keeps going up. So somebody's losing a shit ton of money. And that's what he's saying. Either banks, I think there's actually a lot of sovereign wealth funds. So yeah, how are they going to get out of that? One big problem is how are these banks going to get out from under that big problem, that these losses? The other thing is computer manufacturers, technology manufacturers, car manufacturers. They use a lot of silver, so that's all going up. Energy wise, also, right? The price of energy just keeps going up. So yeah, manufacturing, looking like things are going to get more expensive, and somewhere there's a lot of people losing a lot of money.
Gold is used in major components and also as a safety net. That's why we're seeing them spike. And now natural gas is on its way up. And guess what Europe has done? They have pretty much kissed the production from Russia goodbye, and they are FUCKED, man, in a big, big way. And this is going to put shockwaves. You don't see movements in markets like this. This is biblical.
So he's saying these are biblical type movements. So again, let me give a little bit more context. So with the Ukraine war, when Russia invaded Ukraine, Europe sided with the United States, and they said, okay, they had a sweetheart deal with Russia. Europe did before the war. Russia was going to sell them a lot of cheap oil, and Europe was happy. Well, basically, Europe told Russia to pound sand, and it really screwed themselves over because now they're paying for much more expensive natural gas and energy in general. Okay, and Europe, especially Germany, is focused on a manufacturing economy. So yeah, they really shot themselves in the foot, and he's just highlighting that things are just going to keep getting worse for these European economies. You see these prices are just keep spiking.
Movements, what we're seeing in gold, biblical moments, what you're seeing in silver, and another one for natural gas. This is a TKO. So somebody's going to get hurt. It's going to come out very soon, and get ready, buckle up, because the equity markets are going to go for one hell of a ride. Back to you, sir.
It really is incredible. I saw the news that I don't know if it was how real it is, but there's at least talks in Germany of attempting to reobtain their gold reserves that are stored in U.S. banks. I don't know. It seems like quite the dilemma. It seems like when you put gold in the U.S., you no longer have access to it. Look at Fort Knox. Elon Musk's whole idea of live streaming inside Fort Knox never panned out for some reason.
Nope.
But this is very serious.
Yeah, Jackson's right here. Yeah, Germany is actually asking for some of their gold back that's being stored in the United States. All of these to me are signs of the fabric of our global system is breaking apart, right? We talk about the fabric of our society breaking apart, society collapsing. This is at the global order level. Things, normal, the way things normally worked, right, is falling apart, and these are signs of that, right? This is evidence of it. Could I be an alarmist? Maybe. Are we going to have peace for the next 30 years? Maybe. But these signs, they're not looking good.
Yes, and at the same time, you have BRICS, which is going to be taking their annual summit in India very soon.
Right.
And India was always this country that was like kind of the weakest of the weak links between them and Brazil in BRICS. But now, through all the Trump tariffs and Trump's inability to, I guess, quell some of their fears that they have, India has really moved close towards Russia in a big way, and even China. And now they're talking about this BRICS Pay, rolling out the first step in international payment systems to challenge Western payment systems. So this all seems to be going down a very bad path for the US dollar, right?
Exactly. And we have to just look at history here. I mean, we have to remember the French sent a warship to New York to get some gold after the Second World War. And is it there? Here's the thing.
In the Nixon time frame, we were under the gold standard, and the French said, "Hey, we don't think your accounting is right." They basically called Nixon's bullshit, and we were trying to finance a war in Vietnam with, lying about how much gold we have in our reserves. So then Nixon basically said, okay, forget that. We're just going to print as much money as we want. Nixon got us off the gold standard and said, yeah, we're just going to print as much money as we want. Tough shit, because we're America.
Jackson, and I'm glad we're getting into this and really, seeing how it's going to play out. Remember, Germany, they're saying, okay, yeah, we want to get our physical gold, but a lot of these derivatives are paper trades. They're paper trades. And I'm going to tell the audience something that's going to shock the hell out of you guys when you hear about this. I trade natural gas. I've been trading natural gas for years. Okay, I've been writing derivatives on it. It's been a pleasure for natural gas, writing derivatives on it. It pays great premiums. And for all those people that don't know about derivatives, you're welcome to email me. But I'm going to tell it to you how it happened. Last Friday, I got a phone call from my bank in Switzerland that I trade derivatives. And they said to me, shut down your U.S. position in the ETF of UNG. I said, excuse me, what? Shut down, close your position of natural gas. I said, like hell, you can tell me to close a position. They said, no, if you do not have a registered U.S. address now, you can no longer trade this ETF in your bank account or write derivatives against it. The only time I think this, and this is speculation on my part, but I think I'm right on it. The only time somebody tells you to close down a position, if somebody is incredibly, massively short on that position and need to find the shares for it. And guess what? They came after the Europeans and, well, a Swiss bank, I'm not going to name it, and other banks, French banks, UK banks, have bowed down to the Americans and said, fine, okay, we'll tell our clients to close a position. So there are massive short positions going on. You can see the short positions going on in silver. You can see they're going on in gold. Germany is in a panic. Yeah. How much money has Germany borrowed against that? Most clients that have...
So what it sounds like is happening is these, again, what he's saying, a lot of people are losing tons of money because natural gas is spiking, the price of it's spiking. So they're trying to curb demand, right? So they're saying, you can't, they're trying to kind of make it a little more difficult to buy natural gas because that increases the price, right? So to me, it sounds like a desperation move.
Securities in banks. Most banks, if you read the small print in the disclaimer, which most of us don't, we just sign it because we want to get a bank account open to send money to mom and dad and whatever. But most banks will actually say in their agreements, if you hold an equity position in certain stocks, we are allowed to sell short against that. And if we feel like it, we will pay you a small premium for it. Most of the time they don't, but this is what's happened. All
right, let me break down what he's saying. So say you own 500,000 or 500 shares of Apple, and what he's saying is these banks can basically take your stocks, sell them without you knowing. They will short them for you, and without you knowing, and maybe you get a profit off of that or not. Sometimes what he's saying is they don't even have to give you a profit. So they can take your shares, sell them again, say whatever, you got 500 shares of Apple at, say that's $500. They're going to take those shares, they're going to sell them. They're betting that they go short. And your shares are gone, by the way, if shit goes south, and you don't get a profit off of that. So something to be aware of.
Some bank or some institutions or some governments are in some serious trouble here. And that's why we're seeing all this geopolitical chaos. Goddamn, Navy fleets floating over to the Middle East and heading over to Iran, to capturing people in their pajamas in the middle of the night in Venezuela, in a barbaric way. So, as we always say, the guilty are screaming the loudest, and man, they are hollering from the tops. It's getting crazy out there.
Yeah, I saw Angelo. I always forget how to pronounce his last name.
Giuliano.
Yes, yeah. I saw he was posting about how his bank, he was calling to get physical silver, and they kept pressuring him. No, you don't need the physical silver. We don't want to do that. You don't need that. He's like, no, I do need that. Right? Look at the dollar. Look, I mean, dollar reserves internationally are at their lowest point in global reserves, at massive scales right now. It really seems like a crisis. So explain to me where you think that this is going to head for the US dollar and head for all these derivative markets. You kind of mentioned it with the possibility of hedge funds or certain banks being bailed out. But where do you think it's going to go?
You see, it's like musical chairs. The music's going right now, starting to slow down a little bit in certain sectors, and then going too fast in others. Like I said, you can't march silver past $100 an ounce without that trade coming out somewhere else. You can't march natural gas up 75 to 100% in 6 trading days. You can't march gold past 5,000. All that comes back to my mind is what happened in 2008 when the credit default swaps, the housing crisis hit. Everyone was kind of joking around. Peter Schiff is a legend for calling that out. He was all over every national television program saying, guys, the music's over. These subprime loans are coming in. And it wasn't the wealthy that broke the market. It was the people that, were trying to get on the housing ladder, and Wall Street dangled cheap loans and cheap mortgages, just like they do payday loans against people now. Well, they enticed people to go in and buy those. And then some clever boys in the back of Wall Street said, hey, let's securitize these mortgages. We can get any company to give it a AA or a AAA rating, and we'll float it and we'll sell some premiums against it. Well, right now we have a $600 to $900 trillion derivatives market. That's a lot of money. And right now, we can only imagine how short people are on positions. Why is there so much interest out of nowhere for?
All right, so let me explain more what he just said. So he's reminding folks of what happened in 2008, that there was a whole bunch of gambling going on at this $1 trillion level. These giant banks were just willy-nilly, just gambling all this money away, and the party kept going as long as the housing market kept going up. The system was so fragile, they were so over leveraged, they had gambled so much that what he's saying is basically the weakest people in the economy, the people that could just barely afford a house. They probably shouldn't be buying a house. They're probably not financially secure enough to be buying a house. Those were the people, right, that basically tipped over the house of cards. So with every economic crash, every recession, you don't really know what's going to cause the house of cards to tip. But he's postulating that it could be these short derivatives on gold, silver, and natural gas that could. His point is, if very weak people cause the economy to collapse, well, these are very strong positions, and these people are losing lots of money really fast. Could we don't know. But he's just talking about early signs of, there's some people that are in trouble losing money.
These precious metals. So we're seeing governments getting involved, saying, quietly, can you move a few million tons of this here? Can you get that into our vault in case people come knocking? Because mostly everything has been done on paper. Okay. And now people are saying, wait a minute. I just recently was in Argentina. I know what it's like to be to a country that has seen a currency been absolutely bombed out. Okay. People down there, they're angry. They're pissed off. Wouldn't you be if you saw 90% of your wealth just burn up into paper? And that's what's happening here. People are getting in this panic stage saying, wait a minute, if the US dollar gets out of the way, what's going to hold all this together? And I think it's people that are actually going out like Angelo and saying, knock, knock, who's there? My cash equals some silver bars and some gold bars. I got to.
Yeah. So again, more signs of the system falling apart. What he's saying is, and we talked about this before, people around the world, not just the United States, but people around the world, they don't trust their government's currency. So he talks about Argentina. There's a lot of upper middle class people in Argentina, and this happened to Argentina quite a few times, that they the currency collapsed. So if you have $1 million in the bank and now that's worth 100,000, that's a big pill to swallow, right? So what he's saying is, people are like, I want actual silver, actual gold in the bank that I can see. Where is it? Show it to me. That's what more and more people are saying. They're saying, I don't want more of this paper nonsense. Yeah, this has been going on for, this dynamic of people losing faith in their country's currency has been going on for a long time. But it's looking to accelerate more and more as shit is slowly hitting the fan.
A text message from him a few hours ago showing that he was holding up a couple of gold parts. So he's doing it too. And I went into my safe last night at home, not giving my address out to anybody, but I went into my safe just to go over the collection, to sit back and say, wow, I've been purchasing this stuff for 10 years. And now it's interesting. And I think also interesting for the wife who looks at jewelry and says, what the hell happened to the price of jewelry? Why is it going up so much? And it's going to hit every sector. It's going to hit the AI sector. It's going to hit the sectors in manufacturing, whether it's producers of televisions, computers, even cars. And here's something interesting. Silver is actually trading at a premium here in China, a premium of what it's trading at on spot. So when you see it trading above premium, that means people are willing to pay more physical than actually a paper trade. And let me remind you.
Let me explain what he's saying. So spot means, so when you're trading a commodity like, say, gold, say, for example, gold hit 5,000 this week. Okay, you can either buy it future trading, meaning you're buying it, but I'll get it 3 months from now or 6 months from now, right? That's at the $5,000 price, just, for example. Spot means I want it right now. I want it today. I don't want to wait 3 months, and I'll pay more. So I could buy it for 5,000 and get it in 3 months, or I can buy it for 5,200 or 5,300 and I get it today or tomorrow. That's what he's saying, and it's people are not. Sounds like people are not screwing around. They want people are not having faith in the future, so they're willing to pay a little bit more so they get their gold now for security.
There was a moment during the not .com boom, but that's another story. But there was a moment during the housing crisis when people were writing derivatives or insurance on the these digitalized credit default swaps. They were actually concerned if the bank actually could be wiped out if not being able to honor it. So it's coming. I don't know how big it's going to be, but already you can see the pain in the market here. I mean, yesterday, that thing just blew past $100 an ounce, silver I'm talking about. And of course, it's copper. And this is stuff that people that build houses, anybody that's about to build major buildings in the United States or infrastructure, or military industrial complex, the United States that tries to catch up to other countries that have invested in their military, just like China did. When I was at the air show last year in the weaponry hall in Zhuhai for the, not annual, it's once every 2 years.
He's saying that the demand for these precious metals, especially copper and silver, palladium, what's driving the demand only is increasing because, all right, one, we have all these build outs for AI, right? All these infrastructure build outs. And then the other thing is war, right? So Europe is ramping up war with Russia. The US is ramping up war with Iran. China, of course, they have to maintain their power. So they're not, they have a huge demand. So it's all looking like it's going to keep driving up these prices for the time being. And there's a lot of people losing money off of this. So
their doors and they said, come on in, have a look at the weapons that we got. These boys are ready. They're not going to be suffering this major, price movements in silver. And what we think, if we compare militaries, and this is interesting, that an interesting element here with silver and gold and copper and all these other things is that what you get for $100 in the U.S. for a military item might be a hammer, and what you get for $100 in China might be actually something that can be used in defense. So if we take this calculation and we start to say, okay, here's a nuclear warhead that costs X in the United States or Y in China, the Russians are also there too, and they understand this. And I got to tell you guys something. Russia is long what the world needs. Everything that is in that country, in the ground, above the ground, flowing in the waters, people need it. And I'm telling you right now, Europe, you shut these people off, bad move. It could bankrupt countries. That's how bad it can.
So he's just highlighting again how Russia wanted to trade with Europe. Russia wanted to be friends. And hey, I'll sell you oil, I'll sell you steel and whatever. And Russia has a ton of natural resources that they're happy to sell to people. But Europe was like, and the United States was like, no, we'd rather make war. And yeah, so you have a greater need for things, but then you hamstring your supply. And you're betting things are going to go down. Really bad position financially for a lot of these big players.
I remember back to the most heated days of the second iteration of the U.S.-China trade war during this administration. And China, of course, had a very big move that they played when they said we're going to cut off certain rare earth minerals. The U.S. was without processing. But also China did sell off some of their treasury bonds. And it wasn't a massive shock or anything, but it did send a message, I think. And then we saw Trump in the Greenland negotiations. You saw some rumors going around that the EU could sell off some treasury bonds. And we know that their U.S. reserves are historically actually still pretty low.
All right. So just my final thoughts is, we don't know what's, there's an economic recession or crash every 4 to 7 years, 4 to 9 years. I think our last one was COVID, right? When was that? 2018, 2020. So yeah, it's been 4 or 5 years. So we're in that territory. Who knows? Is this the thing that tips over the house of cards? Sounds pretty interesting to me. But we'll find out. So how do we rise above this? I'll try to empower people. Well, one, I think save as much money as you can. I'm not I'm not a financial expert. Don't listen to my financial advice. But for me, I'm saving every penny that I can, whenever I can, and I've invested in gold pretty big, and it's done well. So there are ways to rise above what might happen. But yeah, my suggestion is save as much money as you can. Even $20 here, $40 here goes a long way in the long run. You'll be surprised over a few years how powerful that is. So. All right, y'all have a good one.